Good afternoon, everyone. Today is a very special day. This is only the third day that I remember waking up after Ohio State won a national championship. So the other two were way in the past. Today is Celebration Day. Ohio State in the house. Great game last night. Sorry if you are a Notre Dame fan, or last week if you're a Texas fan, which many of you are. But we'll live for Ohio State this year and look forward to the Ohio State Texas. I don't know if it's the opening matchup, but it's early, or I should say it's later this year. They're going to play again. So with that, today's topics we'll get into in just a second. I'll remind you, this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So as I get started, today is a nice green day in the market. I'm going to show that. But more importantly, I'll say, yesterday, what a historic day. Besides being Martin Luther King Day, the markets were closed, so we kind of had a vacation day. But inauguration, which went without a hitch. I didn't watch. I saw part of it from a treadmill when I was working out, but I did not listen to the speech or anything. But the markets are reacting in a very positive way today, which I like. And then, of course, to cap it off with that nice Ohio State win. So here, let me share my screen. I'm going to talk about what the markets are doing, some of the things that Trump shared yesterday and the reaction so far. And then Corey's going to talk some about the S&P 500. So here, I will share my screen, and you can see this green across the board. S&P 500 up 0.84%, NASDAQ up 0.69%, and the Russell, which are smaller stocks, up 1.7%. Those are all good numbers. And in the crypto world, Bitcoin's up 2.4%. So I like all those things. Those all bode well for our investments. So what did Trump lay out? So after the inauguration, which we can say that the market likes when uncertainty is removed. It likes certainty. So going into the election, it seemed like it was 50-50. The market's not sure where things are going to go. Trump gets elected on that night. Everything's decided. There's no, delays or anything. The market went up. It kind of traded down after that. And we saw the last moves of the Biden administration, but ultimately the transfer of power went fine. And that is a great thing for the United States and a good example for the rest of the world, because it does not always go this way. So the market likes certainty. Yes, smooth election problems are in the past. We don't need to worry about that. And the market shot up higher accordingly. But some of a new president coming in has to make their stamp. I got to do things on day one. Now, I guess Trump has been president before, so it's not like he's brand new. Like, here, we'll give you a tour of the White House, and you can find out where the bathroom is or something. He's been there. So he comes in, and he's got, I saw anywhere from 50 to 200 executive orders that he was signing on day one or through into today, our first 20 hours, 24 hours or something like that. So some of the big ones that I saw, and I'm pulling it out of this article, was declared an energy emergency. So that just gives him the ability to do, a little bit more related to the grid and national security. So he jumped on that. We're seeing some energy stocks surging up today in value. Rolled back client commitments. This is a political hot button issue that bounces back and forth. Expand drilling, natural gas exports, and roll back clean energy and incentives. So we'll see where all these weigh in. Nothing surprising, honestly. Some of the stocks, the energy stocks, have went up since Trump got elected, and some of the clean energy stocks have taken a beating since he was elected as well. So nothing surprising here. One thing that I consider good, let me see if it gets me back into my, Trump threatens 25% tariffs on Mexico and Canada on February 1st, punting the day one pledge. So to me, and this comes from CNN, I read this as a good news thing. So I know the big concern with Trump getting elected, really related to the inflation rate, is these tariffs. And we're hearing, Mexico, Canada, and of course China. We're going to put all these tariffs on them, and that's going to, he's not going to say it's going to cause inflation, but it could cause inflation. So a lot of people were concerned. I believe these are more threats, just as this says. He threatens them. This is negotiating. It's make it sound like worst case so they come to the table and they can negotiate fair trade deals. Trump is a negotiator. I believe these are threats. I think this is part of the reason the market's up today. Is it's already seeing this kind of campaign, things said on the campaign trail. Guess what? They don't always occur. Who doesn't know that? Everybody promises a thousand things, and they can't even probably remember all the things they promised. So this is a good news, but we'll watch this. I believe this will create some buying opportunities, especially in China, where the stocks are beaten down because of the threats. So we'll see. Another thing that came out is Trump launching the crypto task force. And this is after, and just so you know, I am not a holder of the Trump or Melania meme coin. Some of you may. I hope you got in early. You might want to get out before it goes down. I think it's already up and down and craziness. There are some crypto crazy currencies out there, and I have no idea where these things are going or why they're even worth what they're worth. But the good news is a SEC crypto task force legitimizes the main forms of cryptocurrency, which began last year on January 11th with those ETFs. So this is part of the reason I believe that Bitcoin is up today, because it is the whale of cryptocurrency, and probably is becoming what I would consider the safe cryptocurrency. I bet you never thought we'd be saying that Bitcoin is the safe one and the rest is the risky stuff. So that's just kind of the way things move. But just that Trump is supporting this and the Republican Party is moving this forward right away. This is good news for crypto. They call it a crypto-friendly administration. So we'll continue to watch Bitcoin. It is one of our, I'll say core holdings. It's certainly in our aggressive models, a piece of it, with no intention to sell anytime soon. So with that, I'll turn Corey to hit the rest of what's going on with the S&P 500.
Mike, yesterday I was waiting for that executive order on making a strategic reserve for the Trump meme coin.
Oh my gosh. I think there would be a serious conflict of interest, although, I don't even know that Trump created it. I have no idea where these things come from, but I think if he created it himself, there probably is some conflict of interest, but maybe Melania created hers. I don't know. I don't buy them. I do get questioned a lot, like, hey, can we buy this? Is this an investment? And what I say is, we'll handle your investments, but I am not going to advise you on all kinds of other cryptocurrencies other than to tell you it's just like penny stocks. Some of them will make it and go up a lot, but I don't know which ones they are, and I'm not going to pretend that I do. So
yeah, no, and on that note, serious note, there's a few different common strategies related to stock market investing that people can deploy. There's people who focus on growth, people who focus on dividends, people who focus on passive investing. There's and everything in between. And if you have a strategy that has worked for you and that you feel comfortable with, the key is stick to that. Don't get distracted by some other meme coin or something. Now, if your strategy is meme coins and that's your thing, then that's a different thing. That could be your lane. But otherwise, you don't want to get too sidetracked.
I would say make sure investments. That's what we do. That's our expertise is investments. If you want to, I'm going to call it gamble on the side. That's not what we do. I don't have a personal problem with you doing it, but don't put all your money in gambling, because that's right. You only have to lose once to lose it all. We're investing. Right. We're going for the long-term, slow haul to build your wealth. Yep.
So on that note, that common benchmark that people think about, the S&P 500. So here we are. Here's 2025 right here. We're up about 2%, maybe even more. This might be a day delayed, but these past 2 years we had 24% in 2023, 23% in 2024, and I'm here to say we actually don't want another 20%. The problem with another 20% is these past 2 years, the market has grown faster than earnings, and earnings are not expected to grow 20% this year. So if we got another 20% return, we'd be kind of setting ourselves up for, a little bit of a trap. We saw something close to this in 2019, 2020, and 2021. We almost had 320% years in a row, which it's like 2020, we had a really good year. I know that's crazy, but we did. And then we got, earnings just could not keep up. So, you can see periods of, in right here, what years are these? So 95, 96, 97, 98.
Ooh, those were some good. Those were some good years. I remember. I was young back then, but I didn't have much money to invest. So my $1,000 became 2,000. Yay.
Yeah. So
then I lost it.
Were earnings able to keep up? No. And then
that was
you
called
have
the .com. That was called the .com bust. Corey,
right. And here you kind of had a decade of just not, no return. So I don't know, Mike, what do you think? I think if we could get, if earnings are expected to grow 12% and the S&P could end the year like 7, 8%, I'd feel better about that than another 20%. What do you think?
Well, of course, I always feel good about 20%. Just so you know, I personally, when I look at the portfolios, I love seeing 20%. But I do understand what you're saying, that the last 2 years of over 20% compared to earnings, it seems to be outpacing it. From the quarterly call that we did last week, many analysts, I would say the majority of analysts, are picking 12%. We see some as high as 20 and some as low as 2. But the majority, it's like, oh, easy, I'll just pick 12. What I said was 8%, and really just because the last 2 years have been so high, I expect the price of the stocks to, adjust to the earnings over the trend. Now, 8% is still worth being in the market. I'm not predicting it's going to go down, or, but it always can. We don't know. So I understand what you're saying. Of course, everybody looking at their portfolios, like, I'd rather take 20% in hand than 10% and 10% or whatever. But just, when you start getting a lot of times up, you're certainly at risk of having that big drop off that Corey mentioned. So, and for those of you that remember the late 90s and that .com bust, or I don't even know, it was a .com run up, I do not believe that we are in, I think Greenspan said it, I don't know if it was that then, but we're in irrational exuberance. That was the quote he said at some point. Back then it was like, oh, pets.com is going to save the world, or, yahoo.com is worth more than all the automotive production in the world. It doesn't make much sense. I don't know that we're in that kind of exuberance now. I don't know that everybody's running around saying when you have to worry is when everybody starts saying everything is so good, it can't go down. That's when it's going to go down. So, well, thanks everybody for hopping on. You'll continue, today may be a national day of celebration for the Ohio State win. It is like 0 degrees up here in Ohio. So we're not all in the streets. But I hope everybody has a great day, and we will talk to you later this week. Bye.